Is Bitcoin a bubble waiting to burst, or is it a gold mine just waiting to be tapped? This digital currency has undoubtedly taken the world by storm, but it's not without its fair share of controversy. Bitcoin, known for its volatility, has had financial experts and casual observers alike contemplating the same question. Is this the next big financial bubble? Now, if you're not familiar with the term financial bubble, it's a situation where the price of an asset, in this case, Bitcoin, significantly exceeds its intrinsic value. This usually leads to a sudden drop in prices, or a burst, hence the term bubble. But is Bitcoin really such a bubble, or is it a misunderstood financial revolution? These questions have sparked heated debates worldwide, and we're here to explore them. But before we delve into the bubble debate, let's understand an important concept: Bitcoin halving. Bitcoin halving, a term that sparks curiosity and confusion, but what exactly does it mean? Imagine a gold mine where every 4 years the amount of gold that miners can extract is cut in half. That's Bitcoin halving in a nutshell. It's a feature of Bitcoin's design, where the reward for mining new blocks is halved approximately every 4 years, or more specifically every 210,000 blocks. To understand why this happens, we need to take a step back. Bitcoin is a decentralized digital currency, and its creation or mining involves solving complex mathematical problems. Miners are rewarded with bitcoins for their efforts, creating an incentive for people to contribute their computing power to the network. This system ensures that bitcoins are produced at a predictable rate, mimicking the process of mining a finite resource like gold. But why halve the rewards? Well, it's all about scarcity. Bitcoin's inventor, Satoshi Nakamoto, designed Bitcoin to have a maximum limit of 21 million coins. By halving the rewards, the rate at which new Bitcoins are created slows down, ensuring that we don't reach the limit too quickly. This scarcity is what gives Bitcoin its value, much like gold or diamonds. It's also worth noting that Bitcoin halving can have significant effects on the Bitcoin economy. When the reward for mining is cut in half, some miners may find it unprofitable to continue, which could lead to a decrease in the network's computing power. On the other hand, the reduced supply of new bitcoins can create upward pressure on the price, potentially leading to a surge in Bitcoin's value. So Bitcoin halving isn't just a fancy term, it's a fundamental part of how Bitcoin operates, helping to control its supply and maintain its value. It's an event that has far-reaching implications, affecting miners, investors, and the broader Bitcoin economy. So, Bitcoin halving is an integral part of the Bitcoin ecosystem. But what does it mean for the potential Bitcoin bubble? Having understood Bitcoin halving, let's dive into its impact on the potential Bitcoin bubble. The intricacies of Bitcoin halving can sometimes be as elusive as the cryptocurrency itself. However, it's clear that this event has profound effects on the Bitcoin economy, and many argue that it could even contribute to the formation of a Bitcoin bubble. What do we mean by a bubble? In financial terms, a bubble refers to a situation where the price of an asset far exceeds its intrinsic value. This usually happens when investors continue to buy the asset in the hope that they can sell it for an even higher price in the future. Now, how does Bitcoin halving come into play? Well, when a Bitcoin halving event occurs, the reward for mining new blocks on the Bitcoin network is cut in half. This effectively reduces the rate at which new Bitcoin is created, leading to a decrease in supply. If demand remains constant or increases, this supply reduction could drive up the price of Bitcoin, potentially creating a bubble. However, not everyone agrees with this theory. Some experts argue that Bitcoin halving is actually a deflationary event that stabilizes the Bitcoin economy rather than inflating a bubble. They point out that the halving process is predictable and transparent, unlike the unpredictable factors that typically lead to bubbles in traditional financial markets. Others, meanwhile, suggest that the potential for a Bitcoin bubble is more related to speculative trading and hype around the cryptocurrency, rather than the halving process itself. They argue that it's the traders who buy Bitcoin in the hope of selling it at a higher price in the future that may be driving up prices artificially. While the debate rages on, there's no denying the significance of Bitcoin halving. Whether it contributes to a bubble or helps stabilize the Bitcoin economy,
Halving undeniably plays a crucial role in shaping the landscape of cryptocurrency. While opinions vary, one thing is clear. Bitcoin halving has a significant impact on the Bitcoin economy.
History often provides valuable insights. So, what does the history of Bitcoin halvings tell us? Well, let's take a trip down memory lane. The first Bitcoin halving occurred on November 28, 2012. At that time, the reward for mining a block on the Bitcoin blockchain was halved from 50 Bitcoins to 25. This event was followed by a significant rise in Bitcoin's value over the next year, from around $12 to over $1,000. Then came the second halving on July 9, 2016. The reward for mining a block was further reduced to 12.5 Bitcoins. Again, the value of Bitcoin increased dramatically in the following months, reaching nearly $20,000 by the end of 2017. The third Bitcoin halving happened on May 11, 2020. The mining reward was slashed to 6.25 Bitcoins. And you guessed it, the price of Bitcoin skyrocketed once more, hitting an all-time high of around $64,000 in April 2021. But here's the thing. While the price of Bitcoin has historically risen following each halving, it's important to remember that correlation does not imply causation. There are many factors at play in the world of cryptocurrencies, and it's impossible to attribute price movements to one single event. Furthermore, it's worth noting that after each price surge, there's been a significant correction. For example, after peaking at nearly $20,000 in 2017, Bitcoin's value plummeted to just over $3,000 by the end of 2018. So, while history shows us a pattern of price increases following Bitcoin halvings, it also warns us of the potential for significant price drops. It's a roller coaster ride that's not for the faint-hearted. The history of Bitcoin halvings shows us that there are no certainties, only possibilities. With all this information, the question remains, is Bitcoin a bubble or a boom waiting to happen? Let's dive into the potential future scenarios for Bitcoin. With Bitcoin halvings scheduled roughly every 4 years, the supply of new coins will continue to decrease. This scarcity, coupled with an increasing demand, has traditionally led to a rise in Bitcoin's value. Could this pattern continue into the future? It's a possibility, but remember, past performance is not always indicative of future results. Market trends also play a pivotal role in Bitcoin's trajectory. As digital currencies become more mainstream, Bitcoin's position as the pioneer of cryptocurrency could bolster its value. Moreover, increased adoption by businesses and consumers alike could potentially fuel a Bitcoin boom. But on the flip side, market volatility and regulatory uncertainties are factors that could burst the Bitcoin bubble. Global economic factors are another piece of the puzzle. In times of economic instability, Bitcoin, like gold, often serves as a safe haven asset. But what happens when the economy stabilizes? Could we see a decline in Bitcoin's value? It's a question worth pondering. And then there's the wild card, technological advancements. With quantum computing on the horizon, some worry that Bitcoin's security could be compromised, potentially popping the bubble. Conversely, advancements in blockchain technology could propel Bitcoin to new heights. As you can see, the future of Bitcoin is anything but certain. It's a complex interplay of numerous factors that could result in a bubble, a boom, or perhaps something in between. This uncertainty is part of what makes Bitcoin so intriguing, and for some, so appealing. In the end, it's crucial to remember that investing in Bitcoin, like any investment, comes with risks. It requires careful consideration, thorough research, and a well-thought-out strategy. Whether Bitcoin is a bubble or a boom, only time will tell. Until then, stay informed, stay smart. So let's recap what we've learned today. We've delved into the intricate world of Bitcoin, decoding the phenomenon known as Bitcoin halving. This event, which happens approximately every 4 years, slashes the number of new Bitcoins created and earned by miners in half. It's a crucial part of Bitcoin's infrastructure, maintaining the currency's scarcity and value. Throughout our journey, we've also explored the ongoing debate about Bitcoin's potential as a bubble. The bubble theory suggests that the price of Bitcoin could be inflated beyond its true value, leading to a potential crash. However, others believe that Bitcoin is not a bubble, but a boom, a revolutionary change in the financial world that's here to stay. The key takeaway: Bitcoin is a dynamic, complex, and ever-evolving world. Understanding its mechanisms, like halving, is crucial to making informed decisions. Remember, in the world of Bitcoin, knowledge is power. So keep learning, keep exploring.